Hi, and welcome back to Accounting 161. My name is Stan. This is going to be part 2 of Unit 2 in the course, and we're going to continue with the accounting cycle, this time looking at the ledger account. So in this lesson, we're going to understand what ledgers are and how we can use ledgers for our accounting purposes. And then we're also going to look at something called an unadjusted trial balance. This is the initial start of preparing our financial reports. In this section, we're going to take a look at step number 3, posting to the ledger accounts. It's important to note that if you were using an accounting application, that the application itself will take on this role of posting all of your journal entries into the ledger accounts. But nevertheless, it is very important that you, as the accountant, understand what the application is doing. And that's why we're going to go through this section. Let's start off then with discussing what exactly a ledger is. For each and every one of your accounts in your chart of accounts, you will have an individual separate ledger. And so you can see here that for all of your individual asset accounts, all of your liability accounts, and all of your equity accounts, you will have a separate ledger. And I'm going to show you what that ledger looks like in the next slide. But the purpose of this then is to provide the balance in each and every one of your accounts. And as you post your journal entries to the ledger, it will track the balances. And so when it comes time to prepare your financial statements, you know exactly what the balance is for each and every one of your accounts. For each and every one of your accounts, then, you're going to make up a ledger. And I've just brought up the cash ledger as a very quick example here. So you can see the format that you're going to prepare for each and every one of your accounts. And just remember that this is for the cash account. And so I've written out very clearly cash and also the account number. And before we move on, it's important to remember the normal balance for all of your accounts. And so for a cash account, which is an asset, the normal balance is a debit, meaning a debit to cash represents an increase to cash. We're going to do the exact opposite for a liability account. The normal balance for a liability account is a credit balance. So credits represent increases in liabilities. So let's remember that knowledge from earlier, and we're going to apply that to the completion of the posting to ledgers. As an example, let's take a look at the first journal entry that we made for SoftBite SA, and that is that the owners of the company, they contributed $15,000 in cash in return for shares in the company. So we debited cash $15,000, we credited share capital $15,000. Let's take a look at how that affects the ledger accounts. You can see here it will affect two of the ledgers, the cash ledger and the share capital ledger. So here we go. There's a couple of things I'd like you to note in this as we post transactions to our ledgers. Number one is the date of the transaction, September the 1st. Number two is the reference, J1. That refers to the first journal entry in our general ledger. So if any other reader has any questions, what is this $15,000 on September the 1st? We can reference back to the general journal and go to the first journal entry, and we can find more details about that particular transaction. The cash balance, remember, the normal balance is a debit balance. And so after this first transaction, the ending balance is $15,000, and it should be positive $15,000. The next part then is the share capital. If we've got a credit to share capital, remember the normal balance for an equity account is a credit balance. And so therefore, with the credit to the share capital account, the ending balance for share capital is $15,000. And so now we have posted the first journal entry to our ledgers. To complete our example of posting to the ledgers, I'm going to focus on the cash ledger. And so with regards to the cash ledger then, I have done for you, I've posted all of the transactions that affected the cash ledger based on the 10 transactions for which we created journal entries. And so number one, we can see the name of the ledger is cash, as well as the number of the account, then the date of each transaction, and it's all sequential. Number two then is the reference number, and remember, the reference number refers to the journal entry in our general journal. So if we're not sure where did this $600 debit on September the 30th come from, we can go to journal entry number 9 and we can find out more information. And if we have to, we could also dig out the receipt for journal entry number 9. And then we've got debits and credits. And remember, the normal balance for the cash account is a debit balance. So any debit represents an increase, any credit represents a decrease in the balance. And that's what I've done in this example here. So on September the 30th, the ending balance for the cash account is $8,050. And so you are going to do that for all of the other journals, all of the other transactions. You're going to post all of those transactions to your ledger accounts. Before we complete this section, we're going to go to step number 4, preparing a trial balance. So the first thing I would like to discuss then is, what is the unadjusted trial balance? And so it's a list of accounts and their balances at a given point in time, normally the end of the accounting period. And remember that accounts with a normal balance of a debit will be shown as a debit, and accounts with a normal balance of a credit will be shown as a credit. The sum of your debit account balances must equal the sum of the credit balances. And it's important to note that it helps to uncover some errors, because the debits should equal credits in your trial balance, but it doesn't identify all of the errors in your trial balance. And so it's just one small check amongst several that you should be doing here. So now then, let's take a look at a sample unadjusted trial balance. This is the trial balance for a company called Scott Printing Company, and the numbers themselves have no meaning for us, but the format of this report is of importance to us. So first off then, let's take a look at this format. The title. Any report that you prepare should have a title. Who is this for? It's for Scott Printing Company. What is it? It's an unadjusted trial balance as at October 31st, 2023. Now let's take a look at the format of the accounts. First off, we see our asset accounts listed in order here. The normal balance for assets is a debit balance, and therefore that's how we're going to present our account balances. Next is liabilities. Remember, the normal balance for liabilities is a credit balance. Followed by that is the equity accounts. And in this case here, once again, the normal balance for an equity account is a credit balance. You'll notice here that we're treating withdrawals separately, or dividends separately, because dividends are not an expense. And remember from our first lessons that dividends are deducted directly from shareholders' capital. And so, therefore, it is treated separately. you can see here the normal balance for the withdrawals or dividends account is a debit balance. And then revenue. The normal balance for a revenue account is a credit balance. And then finally, our expenses. And the normal balance for expenses is a debit balance. You can see here then that we've listed all of our assets, liabilities, equity, including dividends, revenue, and expenses in order. This is the same order as our chart of accounts. And when we do that, all of our debits and all of our credits should balance. That's the first test that we should give ourselves to see if we have prepared the unadjusted trial balance properly or not. If it doesn't balance, we know for sure that we have made a mistake and we need to go back and we need to check our numbers. But if they balance debits and credits, we have some confidence. It's not guaranteed, but we have some confidence that we have done the unadjusted trial balance properly. So just as a very quick review about the unadjusted trial balance, the trial balance does not prove the company has recorded all transactions or that the ledger account is correct. You can make errors and not see it in your unadjusted trial balance, but one of the first checks that you should do is to make sure that your debits equal your credits. And if they don't, you definitely have an error that you need to go back and look into. That should not be your only check though, because if debits equal your credits, it still does not guarantee that you have no errors. A trial balance will not identify when you've entered a journal entry incorrectly, or if you've entered a journal entry twice, for example, and it will not show you that if your credits equal your debits. So that's just one check, but that's not the only check that you should be making to make sure that your trial balance is correct. So now we have prepared our trial balance for the period. Next, we're going to look at adjusting entries. At the end of the period, we have to make these adjusting entries, and so that's what I'm going to explain in our next video lesson. We will see you then.